What's up everybody? Welcome to the Stocks channel. My name is Cory and today we'll look at weekly charts of all of the indices and also look at our technical indicators to try to figure out where the market is going for the month of April. So first up, let's take a look at a weekly chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we are looking at our weekly charts on TrendSpider, which I just did a tutorial for to teach you how to set up your charts to look just like this, and I also explained how to use these technical indicators. There is a really good Easter sale going on right now, and if you want to take advantage of it, you can get 7 free days on a trial as well as up to 50% off. All you need to do is click on the affiliate link below and then sign up. You can find that link in the description of this video as well as the comment section. Alright, so first here, looking at a weekly chart of SPY, we are looking into a very critical resistance zone that we are currently approaching, which is the 50% retracement of the bear market, which is right here at SPY weekly levels of 414. That is going to be where the bears want to keep price below, because if we break above that, we are very likely going back to the August highs, which is likely going to take SPY to about 430. So this is a very critical week ahead because we have a lot of positive momentum in our technical indicators, and on the weekly RSI, we have positive momentum above 50. And we also have the BBKC squeeze, which is currently in the positive momentum direction. MACD on the weekly chart is also crossing back above zero and still has positive momentum. So there's a good chance if we get this squeeze firing to the upside that we are going to start approaching overbought on the weekly RSI as we approach that level at 430. Another thing I want you to pay attention to is that price is above the anchored VWAP from the all-time high for 2 weeks in a row. So we are seeing support now that we have broken back above that level. Whereas last time when we were breaking above the anchored VWAP from the all-time highs, it was just a bull trap before more downside. You can see back in here in August when we were above the anchored VWAP, we came right back down. And then again in January, we only spent 1 week above that level. However, this time we now have 2 weeks above the anchored VWAP and that level is starting to flatten out. Also pay attention to our volume shelf because we have a ton of support between 394 and 396, where we have had a lot of accumulation in SPY as it's been going sideways for many months. There has been a lot of accumulation in the low 390s. So on SPY, you want to be patient and you want to wait for resistance to break at 414. And if you are bearish on SPY, you need to manage your risk on a breakout above that level. If you're trying to be bullish, you really want to wait for a clear of that resistance because you don't want to be buying this close to critical resistance because there's just not a lot of great risk reward there. Wait for that resistance to break and then use that as your risk level as support, or use this anchored VWAP zone down here right around 407. So looking at all of the momentum indicators and looking at the price action, we are very close to getting a very critical test of resistance. And if we break that resistance, look for a lot of this positive energy and positive momentum to break to the upside as SPY breaks above 414 and starts marching towards 430. If we get rejected at the resistance, look for the support levels right around 407 and 400, and these are weekly support levels, so you need to wait for the candlesticks to close on Friday. If we look at our options map, we can see we have a lot of at the money calls and puts, so we don't have any strong directional bias from the options flow. There are still traders that think SPY can go higher, and there are still traders that are hedging to the downside. So we don't get too much help there from the options, but there's nothing else you really need to pay attention to except whether or not we can break above or below that resistance at 414. Jumping over to the weekly chart of the NASDAQ 100 triple Qs, we also had the same exact story as SPY with now 2 weeks in a row back over the anchored VWAP from the all-time high. You could see during the bear market, we were unable to even break above that level. And back here in March, that was resistance, and then just below it again in August. Now, the other thing I want you to look at is besides the fact that the price is breaking out, we also have a very positive momentum in the RSI well above 50, right around 60. And we did get the BBKC squeeze firing to the upside because we are now starting to release a lot of that energy to the upside on that very impulsive breakout 2 weeks ago. You can see the MACD on the weekly chart is above zero, so we have a ton of positive momentum in the triple Qs, and that's because a lot of those big tech stocks are doing very well because they aren't susceptible to the weakness in financials. So those big tech names are looking really good, especially while the triple Qs is above 315. So use that as a critical risk level because if we break down below 315, we could come all the way back down on this weekly chart, down around this support zone around 294. You can see the weekly 20 period moving average is getting very close to crossing back over the 50 period moving average. and we are releasing a lot of energy to the upside on that breakout above 314. The next critical resistance for the bear market retracement will be this 50% level, which is right around 331.5. So it does look possible with the triple Qs breaking out that we are going all the way back up to retest those August highs. On the Dow Jones weekly chart, we can see that we're back over that anchored VWAP for the second week in a row, but the Dow Jones is a much different looking chart because we have spent a lot of time above that level going all the way back to November of last year. Remember, in the Dow Jones, we had that very strong push off of the September lows, and we were outside the weekly Bollinger Bands, and we had that very impulsive rally where we basically went up in a straight line with very little pullback. And now the Dow Jones is doing a lot of sideways consolidation to digest that very powerful move. Looking at the weekly RSI, you can see that we are above 50. But looking at the BBKC squeeze, we have a little bit of negative momentum in the short term as we're continuing to see these Bollinger Bands squeezing. And the MACD is just above zero and trying to cross back over to the positive direction. So you can see in the price action, there is a ton of supply above, and you can see it very easily with the volume shelf that we have a lot of resistance to push through right around 338 all the way up to about 348. So there is a ton of resistance above from all of that supply, and we don't yet have very strong momentum to the upside. So it is possible the Dow Jones does continue to just churn around and go sideways, trying to eat through some of that supply before it can push any higher. So it still does look like the triple Qs are going to relatively outperform the Dow Jones. On the Russell 2000 IWM ETF on this weekly chart, we can see a very weak chart, and the Russell 2000 has not even been able to push all the way back up to the 50% retracement of the bear market. And we're getting this very long sideways consolidation and trading range between about 166 all the way up to about 199. This has been a lot of months going nowhere, and you can see from the momentum, RSI is still below 50 on this weekly chart, and we still do have some negative momentum in the MACD, and we have been squeezing on the Bollinger Band KC squeeze for many months now. So as you can tell, the small caps are still struggling, and there's very little trend going on in either direction in the small caps. So this is really just dead money or trading within a range until we get a breakout. So we're going to need to wait until price action can break down below 166 or back over 199. You can tell there's really not a lot of information to take away from the volume shelf, and this is really just dead money until we get a breakout. On the VIX weekly chart, you can see the VIX has been spending a lot of time below 20 this year, and that is usually more indicative of a bull trend or a bull market because there is little fear when you're in a bull market. Last year, every time we had the VIX down in this range, we had very impulsive spikes out of the lows. And this year, we see the VIX continuing to get crushed down a lot of the time when it tries to break out above 20. We did get the VIX spiking when we had regional bank failures, but there's no surprise there. But now that those fears are starting to ease, we're seeing the VIX crushing back down yet again. On the momentum indicators, we can see weakness in the RSI, the BBKC squeeze, and the MACD is still below zero. So you can see the VIX is showing that fear is still leaving the market, which is going to be more bullish if we continue to see this trend. And then finally, jumping back over to the S&P 500, I want to switch this over to a daily chart, and I want to show you another tool in TrendSpider under the other data down near the middle here called the market breadth. And this is going to show you where the majority of stocks are currently trending. And back here in March, we were getting very washed out, and a lot of stocks were getting thrown out as the regional banks were having troubles. But now we're starting to see some positive breath coming back into the market, which is really going to help this rally sustain if we can continue to see positive momentum. Remember, when everybody has already sold, it is very difficult for the market to go lower. And if I zoom out here, you can see many times last year when the market breadth was at its weakest, we were much closer to a bottom than a top, and we typically would rally out of that bottom until we had the breadth back near overbought levels. And we would just continue to repeat that cycle. So use this tool in TrendSpider because you don't want to be getting bearish when everybody has already sold and the market is getting washed out. And you don't want to get bullish when everybody is already in the market and there's very little money to come back into the market. So you can use this as an oscillator of when to get out of the market and when to get back into the market, because it's a very good tool to show you very quickly what the majority of stocks in the market are doing. And if they're all going higher and they're getting a little overbought, it's time to get out. And if they're all going lower and getting very oversold, it could be time to take some long risk yet again. So we're currently in the middle of this market breadth indicator, so we want to see whether it continues to trend higher or if this is just a dead cat bounce before we continue to go lower. So just a quick reminder, there is a very good Easter sale going on right now for TrendSpider where you can get 7 free days and up to 50% off your subscription. So don't forget to take advantage of that deal. All you need to do is click the affiliate link down below and then subscribe to any of the plans you're interested in and you will be able to claim that discount. So happy Easter, everybody. I hope you're all enjoying the long 3-day holiday. And as always, I will see you in the next episode.